Hey guys, welcome to this video. Thanks for joining me in this one. So in this video, I'll be sharing with you the stocks that I'll be looking at in this coming week and even the weeks to come. The reason is because the stock market has been presenting itself with a lot of opportunities to acquire valuable stocks. And if you're an immigrant, for example, and your goal is to build wealth, I would say that one of the first things you want to start with that is very accessible to you as we speak is just investing in the stock market. It's very, very easy. Now, the truth about it is that you don't have to be a financial expert. You don't have to really understand how to read financial statements. You don't really have to understand the intricacies of every little bit of a company. You have good exchange traded funds that you can invest in, and you have good index funds that you can invest in. If you're interested in knowing more about those terms, you can check out more of my videos, and I'll link some of them in the description section below. But in this one, I'll be sharing with you the ETF that I'm looking at, and I've actually invested in this one. And the reason why I'm sharing this with you isn't to let you see what you're missing, because they always say that it's always better to have started, a while ago or yesterday, but the better time to actually start is also today. So I don't know if I got that right, but you get what I mean. The point is, it's never too late to start. It's always a good time to start now. So if you haven't started investing, consider using the links below as well. You have the M1 Finance, you have the Robinhood links down there. You can use it and you get free shares. I get a free share as well. But it's very important to get started as soon as you can, especially in the current market that we're experiencing. So I'm going to share my screen with you, and I hope I can get this to work exactly the way I want it. One of the ETFs that I would really recommend that you check out is the Vanguard Total Stock Market ETF. As you can see, I am actually invested in this myself. Now, I actually own this ETF, or the index fund actually. I actually hold this one in a separate account. So this is a different account. But I wanted to show you this first before we get into the details, okay? As you can see, even with the current stock market conditions, even with the current volatility, even with the current recession that we are in, this ETF, I'm still up almost 20%. That is a lot of money. On the little bit of money that I have there, I've gained about 117 with market gains, and I've earned about $34 in dividends, even with the current recession we're experiencing. Isn't that amazing? Knowing that even when the market is still down, you're still up. And that is because I've been investing over time, which then leads me to what we call the dollar cost averaging. The bottom line of this is, as you invest over time, you are exposing your portfolio or your investment to capture the market at different price levels. So in this case, as the market is downtrending, let's say you bought some of these shares last week when it was worth, let's say, 196. Now it's selling for about 194, which means if you buy it now, you have reduced your average cost basis from 196 to maybe 195. And as you continue to invest, as the stock market trends down, you even further reduce your cost basis. Now, yes, you may wonder why. Well, you'll be losing money. That is true because the market is falling at this point. But the truth about it is that they always say that time in the market beats time in the market, which means over time, this will correct itself. This is just a phase. This is a recession that we're experiencing, and things will change over time. So you don't have to worry about what you're losing. Again, if I had worried about what I may lose, I wouldn't have invested at that time. And what would have happened is, you see what I've gained, dividends I've gained, I wouldn't have gained that. The market gains I have right now, I wouldn't have gained it. Now, the truth about it is that this can drop 40% tomorrow. Or I mean, right now I'm ahead by almost 20%, but let's say tomorrow the market drops crazy and we lose 20% in the market and I'm even or even at a loss, right? What happens is that my money in value goes down, but that has given me more opportunities to actually buy more things, to buy more shares. And that's what I would try to do. We cannot react to the market based on what is going on, because if that is the case, we would always jump out when it's going down, or we always jump in when it's going up, which is actually the opposite of what you want to do. You want to jump in when it's down so that you can buy cheap and sell when it's high, not the opposite, not to jump in when it's high. You want to be in so that you can capture the market as it goes up so that you can make profit. That's really what you want to do. So with that said, if you are getting started, get an ETF like this. Now, let me now take you to where I can do some research on this, okay? And show you exactly VTI and show you exactly what this stock has done in the past, let's say 5 years. As you can see, in the past 5 years, at some point, this ETF was worth 135, and then this was in 2020 coronavirus, it dropped down to 119. So you can imagine someone that has bought this or that bought this at $119 then, see where they would be now, or when it came down here, see where it is right now. They are still well ahead of what they bought it at. And this is where I say it's always better to be in the market to capture these opportunities. The other thing I wanted to show you is this. Let's go down. What kind of companies does this ETF hold? As you can see, the two top holdings are Apple and Microsoft. So my recommendation to you is to not get too involved in figuring out exactly what company to invest in. Just buy an ETF that holds different stocks, and this ETF will make you money over time. The good thing about Vanguard ETFs is that they are very cheap with very low expense ratio, which means you, over the course of time, you won't have to spend so much money covering the cost of maintaining that ETF. The other benefit of this is it has lots of companies, and almost 500 companies, if I remember correctly, that are held in this ETF. So there's a lot of diversification already that is built into this ETF. The other thing is you can invest in fractional shares, and that means you don't have to have $119 or $189, which is the current value of this share. You don't have to have $194 at this point, all right? Or you can start with $20, you can start with $15, you can start with $10. And that's why I said, starting right away is of importance. Do not wait any longer, all right? This is an opportunity to create wealth, and my hope for you is to build wealth over time. I'm in my journey, so you are in yours. So get started, and I hope that you found value in this one. If you have, please give this video a thumbs up, and I would love to see you in my next video.